This is episode 6 of Trading Bot Sessions, where we talk with traders who have built automated trading strategies and trade everything from stocks and options to futures and crypto. In this session, I speak with Kevin Davey, a champion full-time futures trader with nearly 20 years of algorithmic trading experience. Kevin is a published author of a half a dozen books on the subject, and he's built a trading community centered around his trademark Strategy Factory workshop that teaches students the rigorous process of building automated trading strategies. We cover Kevin's background in engineering and how he made the jump into full-time algo trading, including the algo he used to win the World Cup Trading Championship in 2006. Then we cover the Strategy Factory process and the mindset, psychology, and goals required to successfully build profitable automated strategies. I trust you'll enjoy this episode of Trading Bot Sessions with Kevin Davey. Thanks, Kevin, very much for coming on the show this morning. It's really great to have you on here. I've actually seen your work in the past, and I've been really eager to ask you some questions around your process with algorithmic trading. Can you share a little bit about your backstory and your career and really how you got into trading?
Sure. And thanks for having me, by the way. So I went into trading probably the way most people go into trading. I was early 20s, and I got something in the U.S. mail back before email. So this is like I want to say late 80s. That kind of dates me how old I am, but I got a pamphlet, and it was probably like 20 pages, and it said, "Oh, hey, you can make a ton of money trading commodities." I don't even think they called them futures in this pamphlet, and it showed an example of, hey, if you had bought sugar at this price and then added on and added on and added on, you'd have $1 million by the time you were done with this trade. Because what they showed was this huge spike that happened in sugar. I don't even remember when it happened. But I saw that, and being a just recent college graduate without a lot of investable funds, I thought, hey, this sounds like a good way to make some money. So I sent away for this course, and it was basically like a head and shoulders type pattern. Oh, when the head and shoulders goes. And the only good thing about it, well, one, it just kind of taught me the general basics of commodities and futures. It also had like a money back guarantee. And so it said, if you chart these and you take these trades, even if it's on paper, if it loses over the course of 1 or 2 months or whatever it was, send your records in and we'll refund your money. And so I diligently did all the trades, went and updated my charts every night and that kind of thing. And after that time period, it had actually lost money. And so I sent them in and got my money back. But the hook had been set, as they say. It was that commodities leverage type bug. And I just started going down that path. And for a long time, I just did like discretionary trading. Tried to have some rules because I have an engineering background, so I'm a numbers guy. But a lot of it was just seat of the pants type trading, and eventually, it took a while, but eventually I got to what they call algo trading now. Back then, they called it mechanical trading, systematic trading, rule-based trading, a whole bunch of different names for it. But it's just trading by rules that you either write down or ideally computerize and then back test. And you say, hey, this has worked in the past. There's a chance it might work in the future, or at least you hope it does. Then you go and trade it.
If I heard that correctly, you spent how long making manual discretionary trades before you made the switch?
Boy, I want to say it was a number of years, because it sort of became this hybrid approach where it wasn't quite what you'd consider an algo, but it wasn't quite discretionary. So, for example, I remember early on in trading, I would record moving averages and, do like the 4, 9, and 18 moving averages and calculate those. And that would give me a signal. Oh, okay. And so sometimes I'd take it and sometimes I wouldn't. You know, it was like, oh man, I don't know if I should take this signal. And so that's where it was sort of this hybrid, and that didn't work at all. I mean, it literally, I remember doing it with lean hogs, where it was this triple moving average, and I was following it for a while. And I think I started with like a $5,000 account, and within a week or two, I had lost like probably about $1,500 or so. So then I said, well, hey, this doesn't work. It hasn't worked for the past week. The opposite has to work, right?
Mm.
So I just started doing the exact opposite. And for a while it was winning because it was in just tight range. And so moving averages, get whipsawed. And so I was like, yeah, I figured it out. And then there was a big trend in hogs, and all of a sudden my account was down to like $2,000 from whatever I had left. And then I was like, I got to stop and regroup. So people always say, hey, if what you're doing doesn't work, try the opposite. Well, I did, and neither worked. So it was crazy. But eventually, it was kind of this progression of, hey, maybe I need to back test and do that kind of thing. But I was back testing wrong. And so then I'd slip up and still do some discretionary. And so it really wasn't until probably 10 or 15 years ago that I really said, okay, Algos, it's going to make or break me. And that kind of turned off 90% of the discretionary. I don't want to say that I completely quit, but for the most part, I did.
During that period of time early on, I can't imagine there were a lot of resources on developing algorithmic strategies. Can you explain what you went through to learn that process? And was it a lot of trial and error or?
Yeah. And okay, so I don't even know if TradeStation, which started out as Omega Charts, I believe, or uh, I don't even know if that software was available. So I had some computer programming knowledge. And so I had gotten a bunch of daily data, and I was just developing my own backtest system, but I didn't know how much to account for slippage and those limit order fills. What's that? With the prices touch, they should get filled, that kind of thing.
Mm.
And so I was missing out on a lot of it. And you're right, there weren't a lot of good resources out there. There were some books that kind of told you what to do, but for the most part, what it was actually testing things and then saying, okay, well, maybe I'll try trading it, and then trading it, and then realizing right away that, oh my gosh, this isn't working at all like I tested it, and then giving up. Certainly not like nowadays where you can actually learn how to do this stuff. It was uh, the school I learned was the market, and the tuition was just losses. And I can't tell you how many times I started. I would dwindle down an account, take a break, and then start over. Build the account up through outside savings, and then start over. But it that was seemed to be the only way to really learn anything.
And so, how long have you been running algorithmic strategies now?
I want to say I've been doing it at least more than 15 years. So when I won the World Cup trading contest now, that was in 2006. So that was, how many years ago was that? 16. So probably close to 20 years that I've been doing it. But winning that World Cup contest, or finishing in first and second, I did it 3 years in a row. That's what really, I guess, solidified in my mind that, hey, you should be just doing these systematic things. They work when you follow them, when you develop things properly. And because before that, I was sort of doing them, and then, like I said, doing some discretionary things too.
Right. Can you share what helped you win that first championship?
Sure. It was the algo itself. I think I have it in one of my YouTube videos. It was just a simple trend following type algo that I applied to 8 different markets, and at least the one year that I won it. And what really set it apart was in the particular year I won, the price of copper just went through the roof. And a trend follower, that's where most of my profits came from. A lot of the other ones just were kind of break even or lost money. But what was interesting about that now, and I didn't realize it at the time, was the importance of diversification just for overall trading. That it's a lot nicer to have a copper algo and maybe a 30-year bond algo and a euro currency algo. You have a bunch of different market sectors, and that tends to smooth out your equity curve. And I didn't fully appreciate it at the time since I was just going for maximum gains. And I think my thinking was, hey, if I trade 8 different markets, hopefully one will catch a big trend and that'll outshine everything else. And that's what happened. But the lessons I learned from that really, even today, still kind of resonate in my trading.
Is that to say then that you still diversify your strategies across multiple assets and mainly through futures still?
Yeah. So I don't algo trade any stocks at all.
Mm-hmm.
And the reason I don't do that is because probably like most people, most of my retirement money is stock market related. So said, hey, that's enough. I do trade a few stock index futures algos though. But even that, it's sort of underweighted compared to everything else. I just don't want too much in any one sector. And then the rest is all of my algos are all algo based in 7 different sectors, however you define them. You have currencies, metals, energies, interest rates,
Softs.
ags, softs, and then the stock indices. So I try to balance each one of those more or less. But, like, for example, the past year, I've cut back on my energy exposure because energy's just been crazy as far as the volatility goes. So I try to balance things out, but I found that is a real key. And I never, like I said, I never really noticed it, but even in the years after that trading contest, I would have, let's say, 5 strategies on whatever markets. And I'd go into a year and say, I'm going to trade these 5 algos. And what I'd find almost every year was 1 or 2 would kind of break even. 1 or 2 might lose money, or not much, but maybe 1 would break and lose a lot. I'd have to turn off. But usually it was 1 or 2 that would do really well and that would make my year. And the problem with it was the 1 or 2 that did good this year weren't necessarily the 1 or 2 that did good in the future or in the past, so because I remember somebody saying, hey, your soybean strategy last year did great. Why don't you just trade that and nothing else this next year? I said, well, the problem is I don't know if it's going to continue. I mean, just because they had a good year doesn't mean it's going to have a good year in the future. And so the being diversified like that lets you ride whatever ones turn out to be hot, and that's kind of nice.
So is that to say then that every year you kind of evaluate what strategies and asset classes seem to perform and then effectively rebalance back into all of your strategies? If you have a great year with soybeans, how do you reallocate the capital gain from that?
So actually what I do now is I actually will do it on a monthly basis, where I do look at, so I have a stable of about, I want to say about 175 algos.
Wow.
In all different kinds of markets, all the futures markets. And, one option could be, hey, just trade them all. But I don't really want to do that because I have more in some markets than others. So what I do is I've come up with a few different ways to whittle them down and more or less trade the ones that are performing the best. So, some of them, hey, 5 years ago it was doing great, but for the past 3 or 4 years they've been flat. Well, I don't see a real reason to trade those actively right now. I'll watch them and maybe they'll pick up, and then I'll say, oh, okay, well, maybe now the market is more in tune with this algo, or the algo is in tune with the market, however you want to put it. and maybe I'll start trading it. So what I've been doing this year is, and most of last year actually, is trading roughly about 25 to 35 strategies in a month. And I definitely make sure I have something in all the sectors. And even things like currencies, which really haven't done much the past few years. Maybe this year currencies will go crazy. Who knows? But I try to keep a finger in each little basket.
That makes perfect sense. So I understand that one of the courses you offer on your site is something you call the Strategy Factory Workshop. Can you share kind of the main curriculum behind that and the process behind it?
Sure. Well, okay. So I used to, in my old life, my old career, I used to be in charge of quality assurance for a factory that made aircraft fuel pumps. And this was something where basically if we'd make parts and if some of them were off by more than, I think it was like a 30th of a human hair width, I mean, super small values, we'd have to throw this part away because it could fail in the field. And a fuel pump's like your heart. And if you're in an airplane and your heart stops, you're in trouble. And that's the way it is with the fuel pump. So that background really just got me thinking about a factory relative to building algos. And that's what the strategy factory is. It's a process to build algos. And what comes in the door is your raw material, your ideas, the things you think are going to work, or the things you read about in a book. And then inside the factory, there's all these machines or tests. There's walk forward testing, Monte Carlo testing. There's all this stuff you do to them. And then what goes out the door is either a finished product, meaning a strategy, or it's garbage. And most of the time it's garbage. But it's a like methodical process that takes you from an idea to actually build a tradable strategy. And I found that using this process and being pretty objective and rigid about it really helps me, helps students, because now, hey, no matter where the idea came from, oh, I read it in this best-selling trading book, it's got to be good. Well, no, you're still going to test it the same as some silly idea that you dreamt up, or that chat GPT came up with, because you could type that, hey, give me an algo. You test it, and the key is you test them all properly. You have the right machines in your factory. You can't just take an idea and optimize it to death and then say, okay, these parameters, I'm going to go start trading with them, because that's not going to work. You'll find that out soon enough. I know I did way back when. So that's what so the course is just built around, how do I build a strategy from an idea to having something I can actually deploy in the market. And that's what it's all about.
And can you speak to the mindset that you have as you come up with and formulate an idea of how you want to trade? I think oftentimes our attitude might be that this is going to be the one that wins, but do you have to have a certain psychology about a strategy before you test it and walk through the strategy factory?
You certainly can. My feeling on every strategy I test is it's going to fail. And that's just because 900 out of 1,000, 999, whatever the number is, it's huge. The number of failures is huge compared to the number of successes. So no matter how much you like an idea or think it should work, chances are it's not going to work when you include things like slippage and commission and, do that sort of thing. And so the mindset you really have to have is every idea, no matter where it comes from, they're all equal until you test them. And then when you test them, that separates the good ones from the bad ones. And you just have to realize that most of them are bad. I mean, I've certainly had students who said, hey, I've been trading this discretionary method and I just want to automate it, and it's worked great. So they start doing it, and then they one of two things, they realize either they can't program what all they're thinking, which is usually the case because what they see is their results aren't that good. Their back tests aren't that good. And then eventually they say, oh, well, there's other stuff I didn't program, that kind of thing. Or they have a method and they find out they've just been getting lucky all the time. And that actually their method maybe worked for the past 6 months, but you go further back and it fell apart. And that's always a tough one because people kind of misinterpret. A lot of times they'll misinterpret luck, either good luck or bad luck, with being a good or bad strategy. And a lot of times you can't really even tell until a strategy has been running in real time for 6 months to a year. I've seen strategies, and maybe this has happened in your trading, where I start trading them and almost always they start losing money right at the beginning. It's like you never start out like making tons of money. You always got to weather the storm, but eventually, if it's a good strategy, luck will take a back seat, and things will start to work out, and that long-term expectancy will start to take hold.
So knowing that you go into this mindset with most strategies being garbage, as you said earlier, and I think in many ways we're really saying we come into this with an objective viewpoint that we're going to reject the null hypothesis, right? The hypothesis is this is not going to work. And if it succeeds, then we can successfully reject the null hypothesis. How do you maintain optimism through that process? You obviously have a ton of energy to spend years doing this. And I'd love to speak to at what point you also went full time doing this, but I'm curious about your optimism behind the whole thing and what gives you the energy to keep testing all these different ideas.
Yeah, that's a great point, because I actually do tell people in the course, point blank, I said, this will be frustrating. There's going to be times where you're just going to pretty much throw your monitor out the window because you're going to be so mad because you can't develop the strategy. And the bad part about that is that's when you really become susceptible to all these goofballs on especially YouTube or Twitter, the people who never lose money, who double their money every day. You see it and you think, wow, what are they doing? It doesn't dawn on you that or even if they're lying, it doesn't really dawn on you that these people are frauds. But that's, you kind of fall for that. And so what I tell people, recognize that you will get frustrated. And I actually have a quiz on my website that says, do you tend to get easily frustrated? Because if you do, you're probably not going to be really good at this. If you tend to give up, this might not be for you, because testing hundreds of things before you find something that works is really hard. That being said, the other thing I tell people is take a break. When you've tested 100 things for the last 2 weeks and nothing's worked, take a break. Go do something else. Go investigate position sizing approaches, or something else trading related. Read a book on trading or something, and then when your kind of mind is refreshed, go back to it. And what you'll find is usually you'll start developing systems. I mean, I've had a lot of systems that I've developed right after I've taken a break, and then all of a sudden like 3 or 4 come in a row. It's real weird. But the frustration's just something you have to deal with. And a related thing is drawdowns. You mentioned me going full time. I've been doing that about 14 years now, and I'd love to say every single month I made money, and but no. Even last year I had a really good year. I lost money 4 months out of the year, and I was in drawdown. At the end of every month, I look where I'm at relative to the beginning of the year and last month. 6 months I was in drawdown. So even if I made money, I didn't make enough to get to a new equity high. But so that's like half the year that at the end of the month, I was in drawdown. And that too gets really kind of frustrating and hard to deal with, because I think people like to think I'm going to trade and I'm going to make money every day or at least every week. Uh, and it's not like that. And you know what? You go back and you can search some of the pros out there, some of the commodity trading advisors and hedge funds. There's publicly available databases, and you can see what they went through monthly or yearly. You can see the drawdowns, because they report that. And I think a lot of people have never done that, and their mind would be blown when they look at this, because they're like, this is a professional, and he had a 55% drawdown. What? You know, so but yeah, this is a frustrating business, and developing algos is not easy. So people need to realize that.
So, has there ever been a point in the past that you felt like this isn't for me, I'm ready to throw in the towel, or has it always been a big passion for you?
I think it's always been a big passion for me, because when I was doing it part-time, this was my hobby. And that was right around the time when, before I won the trading contests. And then when I won those trading contests, I was still part-time. And it was what I loved to do. I enjoyed my day job, but I really liked building strategies. And people who have that feeling for it understand what I'm talking about. It's that, that feeling that, man, I'm going to do something really cool and make money for me. And it's sort of like definitely a passion. And then, like I said, I was able, I think it was about 14 years ago, to literally just quit my job. And my wife and I had, I think, a 1 or 2 year old and a 1 year old. And I literally remember coming home from work one day, and I told my wife, is it okay if I quit my job in 1 year from today? And there was a reason. It was because our company had been bought out, and they said, hey, if you stay at least a year, we'll give you a year's salary and bonus. And then I'm like, that's basically free money, because I was planning on staying a year. But I'm like, that's the time to leave, because now I have this cushion. I said, if things go real bad, I'll go back to work, or my old job. And things worked out well enough that I never did have to. But have I ever thought about quitting? Not really, because it's just something I love to do. Have I thought about doing things differently? Oh yeah, I definitely. Every time I'm in a drawdown, I think, man, maybe there's got to be an easier way, kind of thing. And so I'm constantly trying to improve what I'm doing, but never as far as just flat out giving up.
So, a lot has changed in the time that you've been an algo trader. In your opinion, what are some of the biggest challenges that algorithmic traders face today?
I think the availability of just all these computerized tools, and it's the software to backtest, for example, that's come a long way. It never used to have like walk forward backtesting. I remember doing that manually. Now that's all easy for you to do. You start to look at things like machine learning and AI. Everybody's talking about it, but hey, I remember in the 90s, early 90s, everybody was talking about genetic algorithms and the neural networks and how that was going to revolutionize trading. And guess what? It really didn't. I mean, some people use it for certain things, but certainly wasn't what it was made out to be, where, hey, you create this neural network and it will tell you when to buy and sell, and you don't have to do anything. You just collect your money. So along those lines, so the tools have gotten a lot better. It's gotten a lot easier to do testing. The downside, there's two downsides to that, though. One, it's drawn in a lot more people, which means a lot more competition, which normally is a bad thing. But the other piece of that pie is most people come into algo trading and do it incorrectly. And I can't tell you how many people I see who they'll email me or find me on a trading forum or something, and they'll say, hey, I did this back test for the last month. Here's the profit. I'm thinking of going live tomorrow. What do you think? And they're like, well, I ran 2 million iterations on my optimization overnight, and this was what came out best. So that's got to be right? And people just do it the wrong way, and that's a bad thing for them, but it's a good thing for the people who know what to do, because there's got to be people who lose for people to win in futures. There's, for every dollar I win by being long crude oil, somebody else is out there losing $1 on that same contract. It's a little different than this, owning a stock where there's not necessarily somebody on the other side short. So that turns out to be good and bad. I mean, great tools, come a long way, but most people misuse them. And, even the trading software itself encourages this. You go to TradingView or NinjaTrader or TradeStation, multi-charts, whatever it is, and you can pretty much pull up a chart, insert a strategy, and it's probably only a couple clicks to you can open up a box where you can optimize an input, and you can run all different kinds of values and see what was best. And people think, oh, well, that's it. That's what I got to do. And they learn the hard way that that's not what you're supposed to do.
So can you speak to some of the early rookie mistakes that people often make, the most common things you see?
Well, one would be not including slippage and commission in their assessment. It's amazing how many systems look great when you don't have any trading costs. Actually, most things work. Like moving averages, which are a classic type algo. You can get them to work a lot of times if you don't have trading costs. But once you add those in, you're done. Over optimizing, people think that, hey, if I can change something, I should optimize it and get the best value. That's another huge mistake. Using all your data to do your test. I can't tell you how many people will do things like, say, with machine learning or big data, where, hey, I've analyzed the past 20 years, and if you buy the mini S&P at 10 a.m. on Monday and sell it at 10:06, you would have made all this money. And I think that's going to keep going. But they used all their data, so they have no way to validate what they've done. And all they did was just, they got the needle in the haystack that isn't real, probably just got lucky kind of thing. That's a big one. People flipping from method to method. They'll try an algo. Oh, this algo lost money this week, it's not working. Or they overrule it. Can't tell you how many people do that, where, ooh, there's a Fed announcement this week, I better turn off my algo, even though every other time there's been a Fed meeting in my history, it's, the backtest used it and ran it. I got to turn it off now. Just people shoot themselves in the foot with this. And then, of course, there's the whole, I got a great algo and I've got to position size it accordingly. And they take on way too much risk with their, too aggressive with their position sizing. And then probably a final one, I've thrown out a bunch of them, but it's the whole backtesting approach. The tough part about backtesting is you do it, and really all you get to see are your backtest results. And so for most people, it becomes, hey, I'm going to try to make my backtest better because that's the result I see. And they keep trying to get better and better and better. And every time they do that, it's actually going to make the real-time future performance worse and worse and worse. And people learn that one the hard way. But the less optimizing you do, the less testing you do, usually the better off you are.
Seems counterintuitive on that last
point. Oh,
point.
it definitely is, especially most of the people who get into this are numbers people, technical people, science, engineering, a lot of doctors. They all think there's a right way to do things, and they're used to schooling. Hey, you got to get 100%, you got to get perfection. And when it comes to building algos, those same type things that helped you out in all those other aspects of your life actually hurt you. And you're right, it's counterintuitive that, and most people I tell that to, and they're just like, yeah, whatever, he's just saying that, but it's absolutely true.
Is there any particular paradigm shift that you see your own students make that leads them in the right direction once they've gotten past some of these early rookie mistakes?
Yeah, there is. And I can give you an example of my own trading, that a lot of students, they end up experiencing a similar sort of thing. And part of my process is I start out with goals. I say, you have a goal. What's your goal? Okay, I want a mini S&P system that does this, has this kind of risk adjusted return, blah, blah, blah. Okay. Then you go and build your system. And then at some point, you're going to look, did I reach my goal? Okay. And the big kind of paradigm shift for me and for a lot of students was, when you get to that point, you look at your goal and you say, yeah, I've met it. And you stop developing at that point. You say, this system is done. It met my goal. And the reason it's a shift is because most people will take it, yeah, it met my goal, but I look at the equity curve. Ooh, there's this drawdown. Ooh, it didn't make money, for 2 months in a row. I can make this better. And that's how people usually come into the class, of thinking, I can make it better. And that shift is when you say, no, it meets my goal, I'm stopping. And for me, that was probably the scariest moment, because I was in this mode of, well, I made it good, I can make it better. And I said, no, I'm going to stop. And I actually started trading this one system. It was on the euro. I specifically remember it, even though it was my first attempt and it worked. And I was like, wow, I was expecting to spend a bunch of hours on this, and it took me an hour. What do I do now? And I went and traded it, and it did pretty well. And that for me was like an aha moment, where I'm like, oh, you definitely have to quit at some point, and it's when you reach your goal. Don't go beyond it. Go on to the next strategy. Then say, okay, well, now I'm going to create a different strategy with a different market. See where that goes.
Where do you see your goals for this year then? Do you have specific goals you've lined up for your strategies?
Yeah, so I have, for my portfolio, for everything I trade, my own personal trading, I've had the same goal for a number of years. I like to get 50% annual return with a 25% maximum drawdown during the year. That's the goal. So that doesn't mean every year I hit it. Some years I hit one, not the other. Some years I hit neither. Last year, for example, I was like almost 90% for the return and around 10% for the drawdown. So I nailed both of them. But this year, already in January, I'm down like 7 or 8% in drawdown. So, who knows what's going to happen this year. But that's my goal. And so with that goal, I built strategies that, when I put them together and they're uncorrelated, I look at all this, the computer simulations and that kind of thing, the modeling I do. And I say, well, I have a reasonable, pretty good chance of meeting those goals. Now, it doesn't mean I will. It just means that's what I'm going for. And hopefully it'll work out. But I'm sure you've seen this in your own trading. Unfortunately, luck rears its head, and it seems like back tests usually have good luck built into them. Real trading usually has bad luck built into it. And, the amount of luck can really turn a what looks like a good strategy and just make it look terrible. So people normally don't account for that. But, even with a coin flip, where you know the odds, you can still lose money, uh, especially over the short term. Over the long term, hundred thousands of flips, you probably would make money if you $2 for heads, one, and you lose $1 every time it's tails. If it's an even coin, you're guaranteed over the long run to make money. But over the short run, you could easily lose money. And if you don't have enough to bet, you could get wiped out. And people don't necessarily appreciate that. They think, hey, I have a winning strategy, I should be making money. And no, you got to weather the drawdowns first.
It's hard to fathom that 10 tails could come in a row and completely wipe you out, right?
Yeah. Or, I mean, it could be 10 out of 12, and so you still get wiped out and they're not all in a row. But yeah, people don't realize and they don't fully appreciate that. But it definitely happens. And, with trading, you think you know the odds based on your back test, but the reality is your odds are always a little worse, maybe a lot worse because of that good luck that's in the back test. And then in the real world, you really have to be careful.
So good to cover these topics here with you, Kevin. I appreciate you speaking to all of this. So, can you share a little bit about how people can get in touch with you on social media and through your website?
Sure. So if you go to my website, kjtradingsystems.com/show, I give away a free algo and you can sign up and get on my email list. I don't spam people, but I send you emails once in a while because I do some free webinars, and I send out announcements for my YouTube channel. I've started this year actually uploading 2 new videos, longer videos, like 5 to 10-minute videos a week on YouTube, and then doing some little short videos that are like 30 seconds to a minute. That's little bite-sized things, which is pretty cool. So if you just search for Kevin Davey on YouTube, you'll find me there. Twitter, I'm KJ Trading. Those are probably the easiest ways to get a hold of me. Or, people can just email me. It's kdavey@kjtradingsystems.com. And, feel free to email me. I answer people. There's definitely a limit, just in fairness to students who pay for my course. But, if you just have a simple question, usually I can answer it or at least direct you in on the right path.
Great. We'll get those in our descriptions here as well. So, thank you very much. And again, thanks for joining us here today.
Well, yeah, thanks for having me. I appreciate it.
Absolutely.